Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. Uh, my name is Alex Cho, and right now I am going to be talking about the Euro US dollar. Euro US dollar is pulling back, it continues to head lower. Obviously, all of the issues in Europe really haven't gone away. Um, and the way they have structured their austerity is what's causing the markets to lose a lot of confidence. Um, the main reason is that you can't restructure the balance sheet of both the government and the population at the same time. It's really bad economically because if everybody cuts back on their debt, the only thing you're going to have is hypercontraction. Another option is for the government to inflate the economy while people pay off the debt. The citizens pay off their debt and deleverage themselves. But if everybody is deleveraging, it's generally bad for the economy. And another way to approach this is to look at it this way. If the government reduces their spending, all those jobs will be lost. A lot of jobs will just go away. They will disappear, cease to exist. What happens is that since these jobs don't exist, other jobs will be lost. The supermarket that sells food to a ton of government employees, or the construction workers who had construction contracts from the government. All of those people will lose jobs, and the private sector will get hurt. Since the private sector gets hurt, then you're gonna experience a rapid you're gonna experience recession, you're gonna experience higher unemployment rates. It just implodes the economy because the private sector was relying on the public sector this whole time to keep some of the jobs they had. Because that's the way it works right now in Greece and Italy and Spain and all those other countries. It makes little sense that that you would restructure the public's finances in the midst of civilians who are filing for bankruptcy, and also they are also restructuring their finances. Now, and for those, and some people are just busy paying off their debts. So if everybody pays off their debt at the same time, you're going to experience a lot of deleveraging, a lot of currency a reverse multiplier effect, so they say, in terms of Keynesian theory. And basically, this reverse multiplier effect from the banking side will cause them to be more conservative, and less loans will be made, less money will be expanded. So all in all, this crisis has to be prevented with public policy and government policy and the right monetary easing steps necessary to get this economy going again, because not everyone can restructure their debt at the same time. And I think that the government, and I mean the European government, should be the last to restructure their debt. And they should allow the civilians to rebuild their assets and balance sheets before the government decides to rebuild and restructure their own balance sheet. So this generally means that the economy in Europe must experience some form of inflation, it must experience some sort of monetary stimulus, and until that happens, I think the Euro-US dollar will continue to fall. And even if they do start to inflate the economy, the euro will continue to fall, mainly because of the fact that any inflationary monetary policy will cause the euro to drop. Over the short term, the euro is dropping because of economic fears and political instability. So right now, political instability is the main theme right now, and that's what's making the euro drop. And the second wave is going to occur because once the politicians realize that, oh, we need to inflate Europe, and the European Central Bank decides to overhaul their budgetary committee plan, or whatever it is that they call it, overhaul their European Stability Fund with $3 to maybe $5 trillion in extra, 3 to 5 trillion euros, overhaul it with that much money, then perhaps in that instance you're going to see the euro-US dollar continue to decline because now they're inflating the value of the euro, and inflation is going to cause the euro to devaluate against a basket of currencies. So political risk and monetary risk, both of those are going to make the euro-US dollar continue to fall. And I anticipate this trend to sustain itself for the next 2 to 3 years, and I don't think that it's going to abate anytime soon. Maybe you'll see a couple bounces because of some, a temporary good news, but over the longer term, I still believe the euro-US dollar will continue to fall.